Global financial markets go on a rollercoaster ride as the Russian invasion of Ukraine spurs commodity prices. Floods along the east coast of Australia set to cost billions of dollars, and claims that 60 VIPs bet more than $1 billion each on average at Crown Resorts. It's Friday, the 4th of March, 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, if you had $1 billion, if I was to give you $1 billion right now, would you be heading off to the casino to gamble that? Isn't that extraordinary?
Extraordinary. It depends where the money comes from. I think that's the point of the story. We'll get to that, though.
I'm blown away. I just think that is an extraordinary sum. So I'm very much looking forward to hearing the detail of that story. We'll get to that a little bit later on. Also later, Sean, your chat with Damien Mew, Managing Director of health insurer AIA Australia. But first, global financial markets, Sean, are in a state of flux at the moment, with some commodity prices soaring to new records.
Yes, Michael, the volatility in the markets is quite incredible, even considering what the global economy has been through over the past couple of years. The past 36 hours have been extraordinary for many commodity prices. Crude oil prices keep rising. Russia is the fourth largest producer of oil, but multinationals have stopped buying output from Russian producers. They're just not bidding, despite being offered discounts. OPEC so far hasn't increased production, so prices have surged. That's oil. LNG prices are at 6-month highs, up 50% yesterday alone. So far, gas has continued to flow between Russia and the continent, but supplies are being disrupted. If they get cut, prices will jump even further. Companies like Woodside and Santos locally are benefiting from that dynamic. Coal prices, they're also soaring, with thermal coal hitting an all-time high yesterday. It's tripled in value over the past 2 months, helping some of the big local producers, including Whitehaven Coal, New Hope and Yancoal. Iron ore prices are up as well, helping the big three miners, and soft commodities are rising in price, with wheat now at its highest level since 2008. Remember, Russia and Ukraine are both major wheat producers. Commodity prices are absolutely surging.
They sure are. And Sean, I know that I'm asking for trouble with this. I'm going to take a punt at kind of figuring out how bonds would fit into all of this. And bonds are definitely not my strong suit. But I would have thought that with all of this craziness, investors would be buying bonds and pushing up prices and therefore lowering yields. Did I get that right?
Well, yes, but it's just not happening. In fact, quite the opposite, Michael.
Right.
Though your logic is correct. Your logic is correct.
Great.
So 24 hours ago, the US Federal Reserve Chair Jerome Powell indicated that rates in the world's largest economy will rise later this month. Rising interest rates is bad for bonds. So investors sold, preferring equities. As a result, prices of bonds are falling and yields are rising, which really is counterintuitive to what's happening in commodity markets.
All right, and that's pretty much counterintuitive then to everything I've learned so far, so I'll just process that another day. What about foreign exchange markets?
Well, the Aussie dollar rose above 73 US cents yesterday. All the sanctions against Russia are supporting commodity prices, we know that. As a large exporter of commodities, that pushes the Aussie unit higher. It's also why the big miners and oil and gas companies have done so well in recent days. The Aussie is also trading around a 4-year high against the euro.
All right, so what did the ASX do yesterday?
Well, the S&P ASX 200 finished the day 0.5% higher to 7,151 points. As I've mentioned, it was the energy and materials companies leading the way. Away from commodities markets, you might expect some of the more defensive stocks to do well. But no. The laggards yesterday were consumer staples and healthcare stocks, as well as technology and telco companies to a lesser extent. They're all so-called safe sectors. So, if you park the energy and miners, they're going up because of commodity prices, but park those. For the rest of the local equity market, the excitement about a strong economy is outweighing the fears around Russia and floods. That's why the stocks that are going up, and the ones that are going down, all very confusing, but it kind of makes sense.
And Sean, dare I ask, what about global equities?
Wall Street initially tumbled overnight, Michael, but clawed its way back, and the S&P 500 in early afternoon trading is flat for the day. The tech-heavy Nasdaq is down more than 0.5%. European markets slumped, though, with the Stoxx Europe 600 closing down 2% and lowers FTSE off 2.6%. The German market tumbled as well. Investors in Europe are worried about how the current surge in commodity prices will impact inflation and interest rates.
Okay, massive start to the show. We'll be back in a moment with the rest of the day's business news. Sean, Russian troops are making headway, it seems, capturing a major city and rolling towards Kiev.
Yes, that's right. Russian troops have captured the strategically important city of Kherson in the south of the country, the first major city to be taken. Troops continue to make their way towards capital Kyiv and second city Kharkiv. Overnight, President Vladimir Putin addressed his Security Council and said the invasion was going to plan and he would not back down. He also made a phone call to French President Emmanuel Macron. Another round of peace talks were held between Russia and Ukraine, but failed to establish any sort of agreement.
All right, what's going on away from the fighting?
Plenty. The New York Times reported yesterday that senior Chinese officials told Russian authorities not to invade Ukraine before the end of the Winter Olympics in Beijing. The World Bank stopped all programs to Russia and Belarus, and the International Criminal Court said it had received referrals from 39 member states, including Australia, to investigate the situation in Ukraine. Emmanuel Macron, in a televised address, said Vladimir Putin had chosen war and the conflict thrusts Europe into a whole new era. And the United Nations said more than 1 million refugees have now fled Ukraine since the invasion began just a week ago.
Okay, now we've been talking about this for a while now, Sean, and the flood crisis is continuing in New South Wales and Queensland.
More than 500,000 people have now been told to evacuate in and around Sydney as the rain keeps falling. Fortunately, the 200 millimetres predicted yesterday didn't arrive, but it is wet from the Queensland border all the way along the coast to the Victorian border. Because so much rain has fallen, it only takes a few millimetres for floodwaters to start rising again. Treasurer Josh Frydenberg said the floods will cost billions of dollars, and the federal government yesterday released a $375 million package for flood victims. Banks will also allow flood-affected customers to pause mortgage, credit card, and some business loan repayments. In fact, Westpac's offered $3,000 cash grants to certain customers. Michael, southeast Queensland is also receiving more rain, with warnings issued for severe thunderstorms, damaging winds and large hail. Premier Anastasia Palaszczuk called the conditions extremely unstable and rivers are once again rising.
Okay, Sean, yesterday we talked about the fact that it's a big week for economics. Lots of data points, lots of things coming out. This one stands out because the figure on the surface looks pretty big. The total number of new homes approved tumbled 28% in January. What's happened there?
Well, the number was definitely much higher than most people expected. But basically, the market for new homes is back to where it was pre-pandemic. The sector got a real kick along by the federal government's home builder package, which incentivised people to build a home. Now, it finished in the first half of last year, but it had flow-on effects for most of 2021. In January this year, the number of private sector dwellings excluding houses, so think apartments primarily, fell 44%. Incredible. Apartment approvals are now back to 2012 levels. Houses were down 18%. The level of approvals in January was about the same as January 2020, all those years ago before COVID. So while the drop is dramatic, it actually just takes us back to where we started, really. And Michael, also, Australia recorded a trade surplus of just under $13 billion in January, thanks to a surge in exports, which in turn reflect higher commodity prices. It was the second largest surplus on record.
Okay. Some of the details, Sean, of the claims made by AUSTRAC against Crown Resorts have been released. And as we mentioned at the start of the show, they are staggering.
Yes, staggering is the right word for it. The 863-page statement of claim filed in the federal court alleges 500 breaches of anti-money laundering and counter-terrorism financing provisions, innumerable other breaches, and claims that could amount to $1 billion in penalties. According to the Financial Review, AUSTRAC claims that Crown did everything from accepting cash in shoeboxes and plastic bags to maintaining relationships with customers suspected of being involved in sex slavery or narcotics dealing. AUSTRAC alleges Crown's management and executives failed to stop money laundering at every turn. Now, all these challenges are yet to be proven, but even making the claims could put in doubt Blackstone's $10 billion bid for Crown. Particularly damaging, and this is what we talked about at the top of the show, particularly damaging are claims that one customer known to be a money laundering risk was still doing business with Crown after the Victorian Royal Commission found the casino giant unfit to run a casino. And also, the financial watchdog alleges Crown failed to assess 60 high-risk VIPs who bet in excess of $70 billion with a B since March 2016. That works out at about $220 million each every year for 5 years. Actually hard to get your head around that. Crown has not yet commented directly on the allegations, but it has said the company has overhauled the anti-money laundering systems.
Sean, everything about that story is big. $70 billion bet by VIPs, a $10 billion bid for the company, 500 breaches of anti-money laundering laws. Even the statement of claim is 863 pages.
Yeah.
There's everything about that story is just extraordinary.
And they are claims at this point, but as this unravels, it's just getting worse and worse, this story.
Yeah, it's certainly one we will be paying close attention to just simply because of the drama. Okay, Sean, while Australia's biggest oil and gas company, Woodside, is benefiting from higher commodity prices, it seems to be struggling to have its message heard on the environment.
That's right. I mean, there's still lots going on in business away from commodity prices and Ukraine and interest rates and things like that. Yesterday, Woodside reaffirmed its commitment to net zero by 2050 in what it described as part of its engagement with shareholders and stakeholders. Going green ain't going to be easy, though, for the oil and gas group, particularly since in the middle of this year, it will undertake a $41 billion merger with BHP's oil assets. Shareholder activists are pushing Woodside to do more to expedite carbon neutrality. Now, this comes as the investor group on climate change. It's an Australian and New Zealand group whose members hold more than $33 trillion in global assets under management. Yesterday set out investor expectations for Australian businesses. The group wants to see science-based quantitative targets, a strategy to deliver those goals, sector-specific commitments, and a commitment to greater monitoring and external verification. While everything else is going on in the world, investors are still pushing hard for companies to reduce their carbon footprint.
Okay, Sean, what's making headlines in today's news media?
The ABC's reporting that last night's Quad Summit between the leaders of the United States, India, Japan and Australia, which was called hastily by US President Joe Biden, agreed to not allow war in the Indo-Pacific. Of the four countries, only India hasn't condemned Russia for its invasion of Ukraine, but the meeting was apparently focused on the local region. The official statement released after the meeting said the leaders discussed the ongoing conflict and humanitarian crisis in Ukraine and assessed its broader implications. I'm sure, Michael, we'll hear more about the meeting as the day goes on.
All right, running through some of the other stories around today, COVID case numbers, Sean, remain elevated. New South Wales recorded 11,300 cases yesterday and 9 deaths. Victoria recorded 7,100 cases and 23 deaths. And Tasmania recorded 1,100 cases. That's its highest number since mid-January. And the ACT recorded 690 cases.
The Australian Competition and Consumer Commission has cleared the way for Corporate Travel Management's $175 million acquisition of Hello World. The deal's expected to be completed by the end of the month.
Sean, I know you'll like this one. Culture Kings, which is the sneaker and streetwear retailer from the Gold Coast in Queensland. It's known for its somewhat frantic activity in its stores, which I know makes me sound very old to say that, but sometimes it's DJs and basketball courts. It's a lot. Anyway, it's going to open its first US store in Las Vegas. It's taken a lease in a shopping centre attached to Caesars Palace Casino. Culture Kings is now majority owned by US retailer AKA Brands.
That's my second home, Culture Kings. I don't know why you're going on. I love the DJs.
I picked you as a Culture Kings guy right from the moment I met you. I thought, this guy loves Culture Kings. He loves the DJs, loves the basketball courts. He's hip.
Been there once, much too loud. Hochtief, the German giant wanting to take full control of engineering group CIMIC, has spent $73 million to up its stake to 82.95%. Hochtief has bid $22 per share for the stock it doesn't own, which is exactly where CIMIC's shares are trading. If Hochtief gets to 90%, it can acquire the remaining 10%.
Sean, Ardent Leisure, the home of some of the theme parks on the Gold Coast, has acquired 3 existing family entertainment centres in Colorado in the US for about $35 million.
And finally, Michael, the competition watchdog wants to crack down on influencers who fail to disclose they're being paid for promoting goods. It wants to crack down on fake online reviews and also on retailers who use false low stock warnings to drive digital sales. The boss of the Australian Competition and Consumer Commission, Rod Sims, last year took on the social media companies themselves. Now it's the influencers, and he's taking a very close look at Instagram, TikTok, and Twitter.
Fair enough too. It's just about disclosing the information. I don't think people generally care if someone's being paid, but they just want to know about it.
I think it is fair that they disclose it, and not everyone realises that people are being paid. Of course they should disclose it.
Yeah, absolutely. And look, influencers are allowed to run a business, and they should be running a business for it, but just tell people about it. Okay, Sean, what's the key overseas news this morning?
While we're becoming relatively comfortable with the Omicron variant of COVID-19 spreading through the community, a Japanese study has found the strain is 40% more lethal than seasonal flu. The fatality rate of Omicron is 0.13%, 40% more than the rate of the flu, but of course well below the 4.25% rate earlier in the coronavirus outbreak. Ford Motor Company, which last year announced a big investment into electric vehicles, will separate its business into conventional and electric auto operations. Chief Executive Jim Farley said the legacy organisation, the internal combustion engine business, was holding back the company. Michael, it just shows how far down the EV path the big automakers have gone, and they realise they have to if they want a future. And staying in the same sector, former Nissan Motor Director Greg Kelly was found guilty of helping Carlos Ghosn, the controversial boss of the company, to underreport his compensation. Now, Mr. Kelly was handed a 6-month suspended sentence. His former boss, Mr. Ghosn, fled Japan 2 years ago by private jet to Lebanon after claims he allegedly hid remuneration of more than $78 million while running the car company.
Wow. All right, up next, Sean, is the Fear and Greed Daily interview. And today you're speaking with Damien Mew, who's the Managing Director of health insurer AIA Australia.
Yes, not exactly a typical insurance person, Damien. He's very focused on more than just physical health, mental health, well-being. He really believes it's actually good business sense to focus on those sorts of things. And you know, I'm sure he's true in that. It's just a really interesting take on how insurers are thinking about the world post-COVID.
Yeah, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 4th of March, 2022. Make sure you're following the podcast and join us online as well on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.